Here with an economic video update. Today is March 6, 2018. A few days ago I talked about the fact that Ms. Shedlock in his blog was predicting a significant collapse in housing prices. I tend to agree with him. In fact, in today's video market update, I analyze stocks, and typically stock values and real estate values often move hand in hand. They're very closely correlated, and often a decline in one may be a trigger or catalyst for a decline in another market. This particular article talks about Manhattan apartment sales. This is from Reuters, actually. And I'll just give you a little bit from the article, and then I've got a couple of comments for you. But it really, I think, plays into the idea that real estate prices may have peaked or are getting close to peaking. Now, Manhattan real estate is certainly not representative of the real estate market in the rest of the country. However, it is indicative. So if you take a look at this, apartment sales in Manhattan fell to the lowest monthly rate in January since February of 2012. So lowest monthly rate in 6 years, as a declining trend in citywide sales both by price and volume emerged. And this is from City Realty. So just to continue and look at some of the stats, across Manhattan, 840 co-ops and condos were sold in January, which is a 20% decline from a year earlier when 1,051 apartment sales were recorded, City Realty said. Data from the New York City Department of Finance showed 995 units were sold in December, which is a 15.6% decline, the firm noted. Sale prices fell 15.5% to an average of $1.86 million in January from an average of $2.2 million a year earlier, while the average price in December fell 14.3% from $2.17 million. There's a quote here from somebody by the name of Gabby Warshauer. And Gabby says, "I'm a little bit startled. It's quite a blip." Well, I think it's maybe more than a blip. To continue, Warshauer says that one reason for the price decline was a lack of new condo buildings entering the market. Well, Economics 101 tells us that when scarcity exists, prices go up, provided demand hasn't changed. So for someone to say that the reason prices dropped is because supply is drying up goes completely against the rules of economics. It is something you would expect someone involved in the real estate business who wants to put a positive spin on what's going on to say. Trouble is, it's simply not based in fact. What we're seeing here is, both in stocks and real estate, we're seeing easy money, which exists because of Fed policies over the last 10 years, finding a home. Whenever money is created, it will find a home. It's found a home, we believe, in stocks and in real estate. And this article just confirms what our theory is, that real estate has likely peaked or is very close to peaking, and we believe the same thing is true of stocks. So that is today's economic video update. Again, it is March 6, 2018, and I'm Dennis Tubbergen.